Welcome back, everyone, to the conference. We will now proceed with a panel on what is undoubtedly a very timely and important subject. The US and Canadian markets have indicated their intention to move to T+1 settlement for equities in the first half of 2024. So not surprisingly, active discussions in numerous other markets about accelerated settlement are currently underway. This panel will explore a variety of questions related to the shortening of the settlement cycle and address both the benefits and challenges that stem from accelerated settlement, the paths to get there, as well as the effort required and the technology and other tools that will need to be deployed by the market and the FMIs. The panelists include post-trade experts and representatives of market infrastructures. We were very pleased to welcome Alessandro Zignani, Head of Business Development at Euronext Securities Milan, and the other panelists of the session. Alessandro, again, welcome, and please go ahead.
Thank you, Bruce. Thank you for the kind introduction, and welcome everyone. I'm very honored to be here, and also before we start, I would like to thank WFC for allowing me to moderate such an important panel. The topic, as Bruce mentioned, is quite important. The title is the settlement cycle, but there are a lot of things that. So there is a short title, but a lot of things that can be discussed together with our distinguished panelists. I'm Alessandro Zignani, Euronext Securities Milan, formerly Monte Titoli. We changed the name when Euronext acquired us, as probably Ms. Satya said in the first speech of today. And we are ready to spend the next hour in order to go through all the possible, cover quite a lot of ground. The panel will explore the shortening of the settlement cycle and the market efficiency. The discussion of the compression of the settlement cycle is gathering momentum and probably is on the top list of the agenda of all the market participants. But moreover, it's been heated up by the decision of the US market to move to the equities from T+2 to T+1. As you probably recall, in the last few years, we have seen the change all around the world of basically all the markets to move from T+3 to T+2. So we have already seen a shift in the settlement cycle, but it seems that the move from T+2 to T+1 probably creates more challenging to the whole industry. And this is, of course, part of an overall discussion on how to make the market more efficient, reducing risks, and reducing the cost of the settlement. So, of course, we try to address also this point during our panel. Discussion could be, of course, a different angle. As we mentioned, we have a representative of different stakeholders in the industry. We have FMIs, we have CCP, CSDs, we have a global custodian, and of course, we have an important angle coming from the trading side, and then, of course, also covering different regions around the globe. So different perspective and opportunity to share different view. We have again 1 hour. It's probably not enough to cover everything, but we'll try to at least address the main points. Maybe we'll try to have some time left at the end, maybe 10 minutes for a Q&A. So as you know, you can input all your questions through the platform. So I would encourage you to do that, and then would be addressed to the panelists. Without further ado, I would like to start introducing the panelists that will be part of this discussion: Michelle Hillary, Alexis Thompson, Andy Hill, Prashant Vagal, and Benoit Dai. So first of all, I would like to thank you all in anticipation for the discussion that we will have. And I will leave the floor as a first round to you for a quick introduction of yourself, your role, your organization, maybe some few notes on what could be the questions in the respective market or with your clients. Maybe we can start with Michelle.
Sure. And hello, everybody. Michelle Hillary. I'm the General Manager for Equity Clearing and Settlement at DTCC. DTCC acts through its subsidiary NSCC as a central counterparty for U.S. cash market equities, ETFs, ADRs, as well as corporates, munis, and UITs, depository for that same asset class. And then we also support buy-side allocation and affirmation process. In the role of T1, DTCC really has been one of the early voices in looking to assess the value of shortening the settlement cycle. And in conjunction with our partners SIFMA and ICI earlier in late 2021, in November 2021, we issued a white paper that sort of outlined the considerations around shortening the settlement cycle to T1, with also some indication in that paper as to why T0 is not the appropriate settlement cycle at that time, at this time. So yeah, I think that sets the stage for what I'm going to talk about in all likelihood.
Yeah, maybe we can go in with Alexis.
Hi, good afternoon, everyone. Thanks for the invite to participate in this roundtable. So I'm responsible for security services here in BBVA, based in Spain. We act as a global custodian. We're a local custodian for clients who want to come into the Spanish market, and then a global custodian for Spanish clients who want to go out into the world. And I think this topic is a hot one, certainly now with our local regulators. I think we're being pushed, as you said, Alessandro, at the beginning to really look at this now because of the move in the US. I think it's something that hasn't probably been addressed up until now. But I think with the consideration that most markets want to be moving in the same direction and want to be on the same page, I think this move by the US has certainly pushed this discussion to the forefront here in Europe. And I think the implications of it are wide-reaching. So I'm really looking forward to this panel. I think it's going to be really interesting.
Andy?
Thanks, Alessandro. Hello, everybody. Thank you for inviting me to be here today. I'm Andy Hill. I'm a Senior Director at the International Capital Market Association. You may be familiar with the ICMA. We are focused on acting in the best interests of the international bond markets. I oversee our work globally related to secondary markets and also to repo and collateral. And while a lot of the work that I do is very much focused on the trading aspects of market practice and regulatory policy, settlement efficiency and settlement optimization are very important considerations for us. And this can be seen in the work we do around secondary market rules and recommendations, for instance, which covers a number of settlement optimization rules, and also in the guide to the best practice for the European repo market, which has recommendations on good settlement behavior.
Thank you. Prashant?
Hello, everyone. My name is Prashant Wagal. I am working as an Executive Vice President in NSDL. I look after the business development and products. As you are aware, NSDL is a CSD in India. And we have contributed a lot for the reduction of settlement cycle, which we are going to discuss in the span of next 1 hour. NSDL commences operation in 1996, and in fact, this year is very important for us because we are celebrating the completion of 25 years of our existence. And as a part of this occasion, there are various initiatives we have taken towards the investor awareness, towards the enhancing the scope of the products, what we have done. And we are happy we are able to contribute to the vision of the India, which is nothing but to have a reduction in settlement cycle. The Indian government has projected the 5 trillion US economy as an agenda for Indian government for the coming next year. And we are very happy to see that recently we have crossed a milestone of 4 trillion USD worth of assets in the Indian CSD in NSDL. And so we are the part of a various initiatives taken by the government of India. And today we are also working with them for a single demat account, which can be used for holding the various assets. And so we are working closely with the various regulators to see that how the demat account can become the passport for holding various financial assets. And so when the investor look at his demat account statement, he should be able to see all the assets, whether they are in the form of FDs, whether insurance policies, pension fund, and many more. So that is a vision we are having for the next 1 year, and definitely we are sure that we will be able to achieve that vision of Government of India. Thank you.
Thank you. And Benoit?
Hello, everyone. Thank you, Alexander. I'm the Wenhua Dai, and I'm the duty chairman of the SAG. I'm sorry, it's a little bit a mistake on the screen. It's not SGC, it's SAG, okay? And I'm also the ex-chairman of China Security Depository, as well as a clearing company, and so CSDC as well. So, and SAG has 35 members, and plus the 2 associate members. And in the 35 members, we have this pure CSDs, 19 pure CSDs, and CCP, and the 7 CCPs, as well as the CSD, with the function of the CCPs, is 9. So tonight, I'm the 2 roles. One role from the SAG, and another role from the CSDC from China. And as you know, for the last 3 years, despite the pandemic was so serious, and the whole global traveling and the social life almost frozen over, but the ACG has still very active. You know, that Mr. Jasma has presented the latest updates of the ACGs and in the first days of the first season, and so. Actually, I'm very appreciative the WFC2022 forums, and in today, and I'm so happy to join today's event, and I hope to be conversation with you, all of you. Thank you.
Thank you. Thank you. Now we can enter into the real stuff. Of course, we do have around the table US and China, which can give us. Of course, their view on the journey they are taking into T+1. Of course, as we mentioned before, US is going to implement it in 2024, while China in some asset classes is already up and running on T+1. So, of course, Michelle, you will be the first for this kickoff. We mentioned you are probably less than 2 years. Are you going to see a bumpy journey, or everything will be a very easy shift? Maybe you can give us a bit of background on what was the main decision of the industry, why you're moving towards T+1, and how do you see the main obstacle, hurdles, and how the market is getting ready? And then I would ask, following Michelle, as China has made tremendous efforts on reinforcing settlement risk control and has already adopted the settlement cycle on T+1 on A shares since the very beginning. So maybe you can give us again a bit of background of the reason behind the efforts of your market to reinforce the settlement risks control. And what specific measure did you take to get there? So, Michelle, first, the floor is yours.
Yeah, happy to kick off. Thanks. All right, so I think we're still waiting on the date for 2024. So where we stand right now is the SEC had put out a proposal suggesting March 31st, 2024. They sought and got a lot of industry feedback on that, as well as on the proposal as a whole. So right now they're weeding through that, looking at all of the comments, and we don't have we don't have a firm date. But I think, the general consensus, I would say, around the industry is that we should do this over a 3-day weekend. It should be a standard 3-day weekend when the markets as well as the settling banks are all shut down. So in all likelihood, I think the earliest that we will see it is, or the earliest that the industry would wish to see it, I would say, is Memorial Day 2024, which is generally around I think it's May 28th. In 2024. There has been a decent amount of push from the industry to push it later. We know that Canada has announced that they're going to go to T1 in conjunction with us. And if we move it to Labor Day, which is at the end of the summer, Canada also has a holiday that day. So I think there's still a bit of discussion as to what the exact date is going to be, and we're waiting on the SEC for that feedback. While the U.S. equity markets in general settled as regular way settlement in T2 today, I think it is also just worth acknowledging that DTCC, through its divisions, NSCC or the depository DTC, does clear and settle activity with a T1 settlement date today and a T0 and even a T0 settlement date. In fact, in DTC, we get about 1 million T0 transactions every single day. So while the asset classes I mentioned, equities, CMU, corporates, munis, UITs, ETFs, ADRs, they typically settle on a regular way T2 now. The shift to shorten those settlement cycles isn't exactly, new or isn't exactly unknown within the industry. But all of that said, even though you can handle it for exception processing, there still needs to be work done in order to make that the regular way settlement cycle. So, I think to your question on whether this is going to be a bumpy kind of ride, I mean, I personally am, of course, hoping that doesn't turn out to be the case. And I think we're taking a significant amount of measures in order to make sure that we have as smooth a transition to T1 as we accomplished back in 27 when we moved to T2. So first off, for information, everybody can go to ust1.org. There's already a whole host of information on that site, and that will be an ever increasing location to find out documentation around the shift to T1. And I mentioned that because the next steps are going to be quite important. Over the course of the summer, SIFMA, DTC, and ICI plan again on publishing some high-level business requirements. I think that those are a really good fundamental first step because they will be at the industry expansive level. In addition to that, there will be a test approach that's put out there. Following those, DTCC will give very detailed business requirements for the changes that are needed to our systems and how you engage in our systems. And again, we won't be looking at any single part of DTCC. We'll be looking at DTCC as a whole. So it'll have considerations around buy side, sell side, asset servicing, etc. And then we will also later on this year plan on publishing a very detailed test approach. I think that all of this information helps set the stage so that firms can begin to do, a detailed analysis within their own organizations to see what needs to change and what they need to do, where they need to land their priorities. And I suppose just in addition to that, it's worth mentioning that DTCC does plan on providing at least a 9-month test window to firms so that they can really run through those test scripts multiple times if they wish to. And in that way, get very comfortable internally to their own organizations that they've done all the prep that they need to. When it comes to the hurdles that we're going to face, I would say that in my view, and based on the conversations that I've been having with participants, it is really going to be quite unique to each participant. And I think that this depends on multiple factors, just to mention a few things like dependency, it'll be dependent on the complexity of the business. If you're a global player, versus more of a local broker deal, you're going to have a very different profile on what you need to do in support of the move. I think, we also have to consider things like what was the investment that your organization did in preparation for T2 back in 2017? Did you really invest heavily so that now you're really just changing some schedules and timeframes within your organization? Or did you take a more of a manual approach where you invested less in the technology and more in building out people to sort of run things overnight? So depending on the level of investment that's done, that's certainly another variable in the amount that people are going to have to do for T1. In a nutshell, though, I would say that at a minimum, anyone that's supporting client activity really needs to look at what they need to do in order to deliver against the 3-pronged sort of requests from the regulators in order to meet same-day affirmations. So, for example, if you're a broker dealer, you are going to have to prove and have customer contracts in place to ensure that you have same-day confirmation, affirmation, and allocation, and the ability to move securities and funds by T1. If you're an investment advisor, you're going to have to keep records to show that you're accomplishing same-day confirmation, affirmation, and that's occurred within your organization. And if you're a CPMS, you have to look at building out policies and procedures to facilitate straight-through processing, as well as submit some reports. Now we have to see what the final rule says and whether that ends up being the same thing in the final rule. But at least at this point, these are the kinds of indications we're getting from the SEC on what you need to do. And so there's certainly an opportunity to deal with a significant amount of analysis there. And then I think like I said, it depends on each client. So, the hurdles that you might face if you're operating in the global markets, you're going to have to potentially modify how you engage with your non-US clients to be able to meet these requirements for same-day affirmation. In some cases, you may need to look at some sort of pre-funding. Certainly, you have to speed up the timing that you're going to be looking at doing the confirm affirmation process. And, another area that you would have to look in is probably how are you going to fund these trades? So is there changes that need to happen within your FX space in order to support US settlement? So I think, the paper that I mentioned that the DTC, SIFMA, and ICI outlined in November of 2021, that's available on us21.org. It went through about 16 different measures that firms need to be looking at across their environment. And so if you haven't already done so, I strongly suggest looking at that paper because it really does help point you into sort of these are the spaces that the industry has identified as requiring or potentially requiring change. And so I think it'll be a really good starting point for anyone that needs to look.
Thank you. Now, Wenhua.
Yes. Okay. Thank you, and appreciate the. I totally understanding the Mrs. Hillary and the scientists and a lot of difficulties among their efforts. Okay. Thank you, and thank you for introduction. And actually, as we were knowing, the China's Asia's markets and is used starting from the 1990 and. They adopted the T+1 settlement model since its very beginning. Specifically, the model is the key point is that the securities are settled in the end of the days of the T+0, and the cash will be finished in the day of the +1. Undoubtedly, the model must be belong the highest efficiency among the single market. I mean, here the single market is that the market is relatively closed in the one country or in one region, and the clearance cash is obviously is just a single currency, and this is when we use the T+1 settlement cycle in the Chinese Asia market. Obviously, and we understanding the more tight the settlement cycle, and it would bring the more high settlement risk to take for the management. Asia settlement risks, we need reinforce the settlement risk control, and some measures we have adopted for that is I just give the briefing and the backbone of these measures. The first one, we need the regulation, and we need the law. And so here we have CSRC, the Chinese Security Regulation Commission. This is an institute. And we have a security law and issued as early as 1991. And the second part is the central depository of the securities. And in the whole of China, we have only one CSDs for the securities, just a CSDC. But I have another one for the bonds. This is the bond market is not for the security market. And the third one is a direct holding. Okay, it's a accounting system is a direct holding from the central depository to the customers. And the fourth one, we use the front end, the monitoring and the control, which are including, for example, the first one, the bid ask side, preventing the short sale on and the overbuy. That means we need the individual and investors of the full margin requirements. And this is the first requirement to control. The second one is third part custodian of the settlement of funds to prevent the brokers the misuse of the funds. Now, obviously, the third part custodian, the institution is most of them licensed commercial banks, and so the third one is settlement regulation as well as enforcement. So the details of my presentation can be found in the website of the WFC and after this meeting. And then because of the combination efforts of the above efforts, the T+1 model works well for the last 20 years. But the environment changed since the 10 years before. And the last decades, the A shares market was open to the global market. So, and we have the T+0 to deliver the securities, but we have the T+1 to pay back to the cash. So we have the one gap. And that's a problem. We have to solve that when we go into the global market to meet the global investors. So we need to making we're starting the so-called DVT reform since the last year. But for this topics, I will explain later. Okay. So so far as stop right here. Okay, thank you.
Thank you very much. It was good to hear the experience of those two markets, and then of course, as we mentioned before, there could be, as probably Michel mentioned, different possible view in accordance to the type of stakeholders, CCP, CSD, global custodian, trading side. So everybody has probably his own view on what would be the challenging, considering the market structure in which they operate, the client base, and all the processing. Then would be interesting to know what would be the main challenges that you see in your own organization. So maybe we can start with Alexis as representing a global custodian bank, Andy and Prashant. Alexis.
Well, I mean, yeah, the challenges I think are huge. We felt them when we reduced from 3 days to 2 days back in 2016 here in Spain. I think we were the last European country to go from 3 to 2 day cycle. Obviously, there's the technical issues, but I think the first thing is the psychological part. Now you only have 2 days to settle a trade. You need to get all the information in. Now, when there's a long chain involved, obviously getting that information can be time consuming. And I think probably that's going to be one of the main challenges, is that change of mindset, whereby, listen, we've traded today. We need the confirmation, the affirmation done today, because we're going to settle this trade tomorrow. I think a lot of the work, there's going to be a lot of work that has to be done there. Obviously, on the IT side, that's an absolute must. But I think there's a mindset. Now, there's a reduction of risk here. The longer you have to settle a trade, you have certain counterparty risk that during that flight, the trade being settled, something can happen to the counterparty. So you're going to be reducing that type of risk that you're exposed to. Obviously, on the other side, you're exposing yourself to settlement failure because you have less time to settle that trade. And now, certainly with the settlement regime that we've put into practice, there's going to be more tension there. Absolutely. But I think it's something that can be doable. I think there's advantages absolutely on the risk side of getting this done. We're going to have to increase how we efficiency in payments, in payment settlements, how we're moving our money around, FX settlements. We're going to have to probably even look at how we settle FXs now, and maybe that 2-day cycle has to change as well. So there's a lot going on around this, and it's not just equities or fixed income. There's a lot of additional stuff. But certainly, if we get the mindset changed, if we get our active, and this is being done in exchange traded derivatives. I think it works. It was very, very similar to what you were describing in the Chinese market. In the exchange traded derivatives, since day one, the settlement happens today and the cash is settled the next day. So it's doable. And there certainly they do have long chains between execution, settlement, clearing, and all the different people involved. So it's something that can be done. Obviously, the volumes in the equity and the fixed income market are much bigger. Let's not lose sight of that. But it certainly can be done. But I think one of the reasons, why can't we reduce settlement? There's no real reason why we can't. And certainly in this day and age, where we are becoming more and more used to instant settlement of anything. I can go on to an online retailer, order something, and have it, if I'm lucky, even delivered same day, but certainly no longer than tomorrow. So why can't we do this in securities? And certainly, here in Spain and in BBVA, for our retail customers, we provide them with that real-time settlement. So we're ahead of the market in terms of when we deposit those securities in a customer account or debit and credit the cash side with the account. So we do that already on the retail side, obviously not on the institutional side. So, but that's something that will be that will be coming. So I think today, where speed is becoming more and more important, I think in many aspects of our lives, not just in the financial side, there's no real reason why we can't do this and why we shouldn't do this. And obviously there are challenges, but I think the benefits far outweigh those challenges. And I think with good timing, the US 2024, that there has to be timing, there has to be a good time for testing, a good environment for testing. And as long as we're all on the same page, and I think that's also important, that we move together. Certainly in Europe, that will have to be the case with Target 2 securities. We'll be moving all at the same pace, but that's really another important thing. So clearly, more advantages than challenges. I don't think there's any real reason not to do it. So I think it's going to be interesting times the coming years on what Europe and the decision Europe takes on this issue.
Thank you. Now, Andy, your view is very important as you represent the trading side.
As a former trader, I think, apart from have I made the right price, I think settlement risk is a bit of a consideration, but I think bigger than that, more important than that, is can I settle my trade? Which means if I'm selling out of inventory, can I get it back from wherever my repo trader has put it in time? Or if I don't have it, can my repo trader get it in time? Failing is expensive and it hits your P&L. You don't like to fail. There are a few exceptions, but we won't go into those. But 95% of the time, you don't want to fail. Now we take, and Alexis made a good point, if we look back at the move from T+3 to T+2 in Europe, that was not without some pain. And where we saw a lot of the pain points was actually in the repo market's ability to adapt and for the repo market to operate effectively in what was now a much more condensed window. Now, there's no set settlement date for repo, as we know, but if you're trying to settle transactions that have moved from T+3 to T+2, then there's going to be a lot of repo activity condensed into T+1 and even T0. That's totally different to say, the US or the UK, where we already have sovereign bond markets operating successfully on T+1 and lots of repo liquidity in the same day. Europe, as we know, is incredibly fragmented as the post-trade landscape. When you look at the multiple CSDs, including the ICSDs, CCPs, payment systems, different currencies, it's not as straightforward. And it concerns me that if we start looking at moving from T+2 to T+1 in Europe, one, it's going to be a lot more difficult than the US or China for that matter. Also, I think we're really going to struggle trying to successfully operate a functioning repo market on same day, which is essentially where we're heading. And I mean, a great example is even today, if you look at sovereign specifics, most of the liquidity is still T+2. That didn't condense to T+1. So you have firms, particularly in larger trades, so funds doing their cash trades and repo at the same time. GC has condensed to T+1, but same day, it's still a struggle. So I think the move from T+3 to T+2, as difficult as that was, the move to T+2 to T+1 in a European context is significantly harder. And I think given the current infrastructure issues, I mean, I take Alex's point, it would be great. And I know where we all want to head, and then maybe we'll talk about that a little bit later. But I think for now, in the European context, it would be an unwise move to attempt it.
Thank you. And Prashant?
So India migrated to T+3 settlement cycle in April 2002. And within the span of the 1 year, we decided to go for a T+2 settlement cycle in April 2003. So there was a lot of talk almost 19 years back that can we move to the T+1 next year, the way we have done from 3 to T+2 and something like that. And the answer at that time was no, because the RTGS system at RBI for immediate transfer of the funds was in the process of development. And so it was decided, let it get developed, and then we can again reopen the point whether the T+1 settlement cycle is required in India. Since then, there was a lot of work happened for moving towards the T+1. And in February 2022, 3 months back, India has adopted the T+1 settlement cycle on an optional basis. So now in the equity segment, T+1 and T+2, both the cycles are running. Some of the developments which has happened in the last 2-3 years has forced the India to work very efficiently on a T+1 decision. The one of them was previously for the institutional investor, whether it is a domestic mutual fund or insurance companies or the foreign investor, margin requirement was not there. Since last 2-3 years, it has been implemented for the institutional investor also, and they have to bring the margins on a T+1 basis. Whereas for the retail investors, margins are on a T+0 basis. So today what has happened is that most of the communities are giving the securities as a collateral, as a margin, if they are selling the stocks. If investors are buying the stock, then the foreign investor has booked the forest. If they have to book the forex, then what is happening is that for margin purpose, they book the forex, then there are conversion charges, then for settlement purpose, they have to again book the forex. So what they do, that on a T+0 or a T+1, they are booking the forex so that the settlement can be done in a one go, and the margin requirement can be also fulfilled. So today, though there is a T+2 settlement cycle, it is observed that for the retail investor and institutional investor, as such, the securities and the funds was almost given on a T+0 or a T+1 based on the type of the investors. And so the India government was thinking very vigorously that if a securities and the funds are already coming on a T+0 or a T+1, why not we look for the option of going for a T+1 settlement? Second thing, what has happened that in the retail domain, many brokers started offering the concept like an Insta Cash, where if you are selling some securities, within next 2 hours, they are crediting the client's bank account with the money which ideally they are supposed to receive on a T+2 basis. And it is applicable for the selected investor based on the profile of the product, based on the type of the brokerage plan they have selected. So for some investor, securities which are been sold, the money is credited immediately. For some, it is credited on a T+2. So the government went ahead with the decision that it's the right time since last 19 years when we move to T+2 to look forward for a T+1 settlement cycle. Knowing that it's a risk, considering migrating complete capital market in a T+1, this decision was taken on an optional basis. From February 2022, the scripts are moving in a T+1 settlement cycle in a phase manner. First, there were 100 scripts. Then on next 25th March, there was 500 more. 25th April, next 500. So till now, 1,600 scripts have moved to T+1 settlement cycle. And with this space and the speed with which it is moving, we are expecting January 2022-23 for a complete India to migrate towards the T+1 settlement cycle. Now, when we have decided this decision to implement in the phased manner, we have gone based on the market capitalization of the scripts. And we have considered the daily average price of October 2021 based on the highest turnaround happening on either of the exchange. I'm sure you must be aware we are having two exchanges, National Stock Exchange and a Bombay Stock Exchange. So, and the scripts are traded on the both the exchange. So wherever there is a maximum turnaround on that exchange, the closing price was considered and the market capitalization was arrived upon. Then it was arranged in the descending order, and now the lowest market capitalization, so the turbulence will be less, has been considered for migration to the T+1 settlement cycle. So till now, in 3.5 months, retail investors, domestic institutions has already tested the flavor of T+1 settlement cycle, and the foreign investors are now going to experience in the coming days. So the June 2022, when we will have a 25th June trading to start, we will see the foreign investor actually experiencing the T+1 settlement cycle. And so in a phased manner, it is done so that there is a reverse gear. If because of some reason there is a failure, the government has a plan whereby the particular script or this concept can be again moved to T+2 settlement cycle. So that way we are able to implement. Since last 3.5 months, we have not seen any need or any challenge in terms of implementation, and we are very hopeful that January 2023 we will be able to have a complete T+1 settlement cycle across all the securities which are traded on the both the stock exchanges. Thank you.
Okay, thank you. Very interesting. So we have, of course, different answers in relation to the markets, the type of clients, asset types. So it's not easy. It's not easy. But in line with this theme of settlement compression, I will also ask the panelists to compress the answer time, as we are running a little bit out of time. And then, of course, we would like to have also maybe some question at the end. But no, very, very quick one on, as I mentioned before, the settlement compression is part of the major efforts on settlement efficiency. And we have seen other initiatives around the globe that try to address this issue. One is related to the China's market, where we see that they are introduced a DVP reform to further enhance settlement efficiency. So maybe, if you can give us a little bit of background on what would be the outcome on the reform. And then also Andy, you know, we have done, of course, I was part of this exercise, done a lot of efforts in order to implement the settlement penalty in Europe. So now it's the early days as it started February the 1st, but maybe you can give us some highlights if you have seen yet any type of impact in the market, as of course your organization was quite vocal on this, and then you issue in the last years some important papers to see the effect that the settlement penalty can have in the market. So When Hawa and Andy, please, the floor is yours again.
Okay, thank you. Okay, thank you. And again, okay, in May and 20th of this year, just 2 weeks ago, and the Chinese Security Regulation Commission (CSRC) and officially announced that the DVP reform in China's A-shares market will be officially be implemented starting from the June 20th this year. So that is almost 5 years effort to making the the T+1 and the T+0, T+1 settlement cycle, and from the cash to the security that can be meet the global standard of FMIs. As I elaborated before, the existing A-shares T+1 settlement model that we have one net gate. That means we deliver the securities in the end of the days of the T+0, and we receive the cash payback in the next day. And we have used a lot of the front end control and the perform margin requirements. But this is for the closed market, just like the Asia's market before us. It's efficient. But if the market want to merge with the global market, you have to meet in with the global standard. Okay, this is the PFMI requirement. And so we still studying this. We call it the DVP reforms, and the initiative is about 3 years ago, and we was this is one of the two reasons. The 2017, and the World Bank and the EFSA can to evaluate the Chinese market, and they have called for in their report will come date that China have to meet with the full DVP requirement of the FMIs. So that's the goal of the DVP reforms is to introduce I think the most important part is a multi-batch settlement model that investors can follow the same practice customers, just like before, and they can receive their securities in a T+0, and but the money will be delivered just as before. And CSDC, that means the Central Security CSDs, will place the tax on the receivable securities. This is most important. And I think some of the countries, some of the central CSDs actually did that before. And so the settlement default disposal curbing all the type of the business. That means if the second day the money is not coming, the tag will be still there, and the T+03 and we will be disposal of all of the targeted securities. So the key point for the reforms are the first, link the security legs with the cash legs, attacking all of the trading securities in the end of the day. And the second of the important point is that the multi-patch batch settlement on a T+1 introduced. That means we have the 4 times settlement. The first 2 times in the first day, the T+0. If not enough money for the security firms, and the next day we have it in the morning and in the afternoon. We have 2 times, give them more chance to give the fulfill the cash requirements. If the end of the T+1, the cash clearance is not fulfilled, and then the tax will be used for the disposal. If the money clearance finished, all of the tax will be removed. I think the logistic for that is not very complex. It's clear. So the third one is the disposal of the targeted shares. Some of the details, the mechanisms will be seen from the PPT will be delivered to the forums. And the disposal of the targeted shares will be starting from the T+3, T+2, and then it's making that all of the tech sales can be used to compensate the short of the money. So the DVP reforms in China's Asia's markets, it's significant milestones in China's capital market. This means we have meet the requirements of the cash rate as well as the security latest. So the reforms aimed to the 3 points. The first point of the interim and expose the settlement risks, and this is one of the strong control measures. And the second one, improve the refined management of the settlement risks and the efficiency and the for-sale systems risk in the Asia's market. We keep the customers before we still finish the T+1 cycle, but we use the DVP to meet the global standard. This means the compliance with the global practice of the DVP settlements. So this, from this practices as well for the prototype run for almost 6 months. So we are announced will be officially implemented in the next month. And the FSAP and the World Bank has sent the small group to China to investigation from the very beginning to the end of this model and the implementation details. They agree this is the total fulfill the standard of the global DVP requirements. Okay. By the way,
thank you. And then sorry for we really running out of time. Andy, short answer on the settlement penalty.
Yeah, I'll be very, very quick. I think too early to tell. I think what will probably help is other initiatives alongside penalties. So there are market initiatives, for instance, on the bond market around shaping, partialing, greater uptake of the CSD auto borrow, auto lend programs. I think they will, in combination, help with settlement efficiency rates. I think as well a higher interest rate environment. If we think of what a penalty mechanism does, it replicates the cost of failing when you're in a very low to negative interest rate environment. But I think ultimately it will be firms actually spending money and investing in their settlement systems and their settlement staff that will make the key difference. So I think around the margins it will help, but I don't think by itself it's going to be the driver.
Okay, thank you. Last question, and then we try to see if we have time for Q&A, and then a quick touch base on technology, which as usual play an important role in any project, and this one probably can be very important. So what do you think? Do you think the existing technology would be adequate, or we need more investments in order to support this shift? Michelle, Alexis, and Prashant, please, quick answer. Thank you.
Yeah, I mean, from a technology, and I'll keep this super quick because I know we only have 5 minutes left. Look, I think there's 2 ways of approaching this. You can do the Band-Aid, or you can acknowledge that this is step 1 or potentially step 1.5 towards a possible alternative where we even go to T0. So I think we have to be strategic in our technology decisions, and really kind of look towards what's going to serve us best in the long run, as opposed to like the little quick patch fixes. I know that's the approach DTCC is doing. We're looking expansively. We're incorporating AI, we're incorporating ML, we're incorporating other technologies that lend themselves to this. And where appropriate, we're doing some more exploratory stuff in a parallel stream, such as DLT with our project ION. So I think, every company will make that decision based on resources and what their long-term view is, but that's DTCC's approach.
Yeah, I mean, following on from that, I mean, Michelle made a great point earlier on. When we did this move from 3 to 2 a couple of years ago, did you have in mind that this was the first step? If you did, then probably the pain you're going to go through now is certainly less, and the investment requirements less. Now, if you didn't do that, certainly I would strongly advise this is not the final step. And I think, again, as Michel said, going down to T+1, great, but this isn't the end of the road and the end of the story. So if you didn't make that strategic decision last time, try and make it at least this time, because there's more to come. But IT definitely, fundamental in all of this, absolutely. But it's only part of it. I really think, IT absolutely fundamental, no questions asked. We need it. We've seen it in the payments landscape. A couple of years ago, we were all complaining and we were blaming IT that, hey, we couldn't make a payment in less than 3 days. Where's the money during that time? Whose is it? And now we have instant payments. We can do that. This isn't a technology issue, I think. Obviously, we need to invest in technology. For me, it's much more an operational issue. You can do the technology with investment, you can get it sorted out. But you really need to look at the whole value chain, because as in IT investments, you need to make along the whole chain, but also big operational changes. And I think the operational part is a much bigger challenge than the IT part, in my humble opinion.
Yeah, I think you're expressing sort of a common theme or a common thread that comes out in a lot of the industry discussions. I back 100% what you just said.
Okay, Prashant.
So we agree with the point that technology will definitely play the important role. But at the same time, we feel that the processes need to be strengthened, and so that CSD can play some role. And that's the reason we are in touch with the custodians, participants, to look at various processes followed by them, like a matching of the trade with a swift message. That type of activity we are looking to be done at our end, so that we will be able to minimize the time taken for various activities at their end, and the load of making any technology changes at the participant custodian end can be taken care by the CSDs.
Okay, I think we have 2 minutes left. I would like to pose the next question, but you have to answer yes or no. So it would be a quick one. Which when we talk about the settlement compression, of course, we always think about T+0, which is probably the end game, and with a different kind of magnitude in terms of issues and challenges. So the simple question is it going to happen in 5 years' time? Yes or no, Michel?
Yes, but I think 5 years is a stretch. Okay. And I think the version of T0 needs to be determined yet. Is it netted, not netted? What does it look like? Yeah. So I know.
Alexis?
I think in 5 years, no way, but it should happen.
Okay, Andy?
On the current trajectory, for Europe, we won't even have T+1 in 5 years.
Okay, Prashant?
So we are not looking at T+0 in the near future. The regulator has also given a commitment that they will not enforce that. But definitely when the T+1 will be successful, the question will be always on the plate. Why not go for a T+0?
Okay, and last but not least.
Yes, I say yes. I say yes.
Yeah, okay. So sorry, was a little bit a provocative question, but just a little bit of flavor in each part of the globe. What would be your view? But nevertheless, will be another topic to be discussed probably at the next WFC. Hopefully, next time will be in person. And at this point, I think we are really very spot on time. Probably, I'm sorry, we do not have time for opening to question, but I would like to thank very, very much all the panelists. It's been an interesting discussion. Probably we were just scratching the surface because if we start discussing, it would be probably one-day event. But I will back to Bruce, and thank you very much for your attention.
Thank you.
Alessandro, thank you, and all of our panelists. We'll be taking one final break before the final panel of the conference, which includes some of our industry's most senior and visionary leaders who will share their perspectives on and vision for the future. Do not miss any of this panel discussion, which will begin shortly. Please be back with us at the top of the hour for the final panel. caminar.
A ver.